Good afternoon, everybody. It is currently 1:33. Just been kind of watching New York Open. And what do we have here? Well, yesterday we entered a sell on EU. It was profitable. See the what? What? Okay, there we go. But before that, I see some potential movement now. So here we have a liquidity sweep, which is from the London session, which took out these highs. Then we had this one candlestick here is manipulation. And when we zoom in on this candlestick, we created a fair value gap here. Price came up into it and looks like we're rejecting from it. Now, the thing I like is clear manipulation. So my decision is to essentially decide right now whether I classify this as manipulation or not. So we have a consolidation here, then we have some displacement, consolidation, big move, but this big move is not institution. So when you get that pullback, it can go above here because there's no fair value gap. For example, here and here, this candlestick destroyed that. And so that continuation, it created, made this a non-institutional leg. And what this has done, which is interesting, is at the time was from New York Open, it took out, it's a Judas swing, it took out these equal highs here, this fair value gap, and then of course didn't reach this one. So probably could have entered in on the sell right here. I didn't want to do that because I didn't want to enter before 1:30. We've currently got now from 8:30 this move downwards, taking out some more swing lows. So I'm now waiting for price to come back up, and I'm willing to sell at this area here. Why am I selling? Well, for the week, we're actually bullish in terms of what we've seen so far. I personally have been bearish on EU. The shape looks like it's preparing for bearishness. And if you told me at the start of the week what this next candlestick would be, I might say bullish to bearish, in that it might tag in this fair value gap and then go back down. And what did it do? Tagged in this fair value gap and it looks to go back down. So the start of the week, we kind of had that push upwards, which was the tag. Now, once we reached our target, we seem to be dropping, because you'll also realize that these 2 days, Monday, Tuesday, created Sunday, not 2 weekdays. So these 2 weeks created equal highs. So over the course of 2 weeks, on Monday and the next following week, Monday, created equal highs. What did we do? We swept it. So we did two things with this 1 week. Sorry, we tagged into this weekly fair value gap and we took out this weekly liquidity. So the following suit would be following the idea of the overall bearishness. So now that we've had that, if you go to the daily time frame, the start of the week is here. From Monday, we came down initially, took out this liquidity down here, this swing low. Then we used that to push up, which took out this liquidity, which is equal highs, and tag into that weekly fair value gap. And then now we look to be going downwards, and I'll be targeting here. But first of all, I'll be targeting here, since that would be equal lows, as we've marked out with this green line. So if we now zoom in, right, where are we in the grand scheme of things? So since today, we created this range in Asia session. London session took out the Asia low, then London took out Asia high. Then we had the movement downwards. Now, this is not the cleanest displacement. You probably have displacement here, right? From here to here, then we tag back in, and then we continue that leg. Then we create some clear institutional manipulation. And in this leg, we have our displacement. So you could have got in already around kind of 7:30 in New York time, which would have been 12:30 GMT. I personally don't mind because it's within the kill zone. But I waited for New York Open just to see if price wanted to go up higher. I was kind of staying away from the markets. Today wasn't really like a market day, it's a Friday, so I'm not really too active. Let me double check news. Okay, there's nothing today at all. So there was no news manipulation, right? So my entry model will be this, that we have displacement here. We've pulled back up into it. We've now displaced again. This is clear displacement, clear institution, clear footprint. And we've taken out some liquidity. So hopefully we get that pullback into an optimal trade entry where we can enter as and sell and have a tight stop loss. That would be my personal entry model. And of course, the daily, or rather the weekly target is down here. I don't think we can get there in just today. I think something more realistic would be something here or potentially down here, this 14139 level, which will just make 1415. And then here, we like the 1406 level right here. So this is more plausible, which is a 1 to 9 if price obviously comes up to our entry. Yesterday's trade, we caught a rough 1 to 2. This is the original idea. This red line is the liquidity we just swept. And then we had the displacement taking out all this area here to meet this fair value gap, push back up into our entry model, and we got in at optimal trade entry, so tight stop loss, and then took partials when we took out the initial low that we just created. Remember, we got in here, that low, we took some partials out because we expected some resistance with all this bearish candles over here. On larger time frame, that's very few candlesticks. So we drew at the top of it. This was the area I expected some rejection, and we got a little bit here. We can see we came up close to it, came up, came here, came up. So we got out round about here. And I think I held it, I'm not too certain. But the idea was that we shouldn't go above this here. Why? Well, for one, we're bearish. This is a bullish candlestick, which is actually an order block. So it's not just an ordinary bullish candlestick, it's an order block. Meaning that we should expect price to not go above it. If it goes above it, you have to be kind of cautious, like what's going on. Maybe price is reversing. So I set my stop loss above here, and I'm expecting price to come in contact with it and then reverse, and that's exactly what it did. Now you could re-enter here, but I opted not to because I want to get some security and secure profits before I start trying to compound. I want to get greater understanding before I start to compound. So price came up into this area, and I expected it to come back down. It did. And as you see, it came down. How does it come down? With displacement. You can see there's fair value gaps within this move. Whenever there's a move, I like for there to be fair value gaps in it because it allows for price to come back up, number one. Number two, it also means that institutions are potentially involved. I don't think retail traders are the general catalyst for the creation of fair value gaps. Therefore, when I see a fair value gap, I assume it is an institution involved. Not always, but a large part of the time. Now, if I'm cautious or I'm not certain if an institution is involved, it would have to be a clear, strong, large displacement that is showing to therefore emphasize, clarify, make me feel more confident in the fact that it is indeed a institutional fair value gap. So then we came out here. It was towards the end of the day. Obviously, 5 p.m. is when it closes, which is 1700, which is round about here. And I was like, you know what, we're consolidating. I don't expect price to come above here. This was the bullish candle. And when price came up to it, it came down, came up, and it just consolidated. So I was like, you know what, let me just leave. So we ended up closing. It was a 1 to 2. It was a little bit like 1 to 2 point something, but I just rounded it to 1 to 2, especially with the fact that we took partials earlier. So that was the trade that we took yesterday. That was our first trade in a while, but it's a profitable one. And that's literally what I care about right now. I don't even care if I trade like once a week, as long as I'm profitable consistently. That's my main goal, so that when I can increase in capital, it's the same thing I would do, but with bigger numbers. So the current posture is because we established this as institution, and we've had this liquidity sweep at the start of the day with the power of 3. We have Right, let's get the candlestick. There's a cool indicator I like to use. So we opened here and right here, perfect. It gives us, you see the dotted lines, it gives you where it opened. So opened here, consolidated around that opening price. Then price came up, took out Asia's high, then it came back down, right? So this from here to here, 10 pips and 10 pips down. All of this is accumulation. So everything below this is distribution, everything above it is distribution. So essentially, we've only started distribution from New York right here, bam, bam, bam. So it shouldn't come above here, the starting point of this place here. And if you look at this candlestick, it shows you, right, the open, the manipulation. This is open manipulation right here. So now we're in still accumulation. We just are outside of it because accumulation is not just the move upwards, that's manipulation. Accumulation is manipulation plus the distance from open to manipulation transposed either downwards or above, depending on if it's bearish or bullish. And then that total area is all accumulation, and everything below that now becomes distribution. And then where it closes is obviously the end of the day, the close. But generally speaking, the lower the day and the close of the day are quite close to each other. Therefore, we can close towards the end of the day, which will be 5 p.m. New York time. And we should expect that the price shouldn't go much higher in terms of pullback. Not always. I've seen sometimes it happens, but the odds are in our favor. Yesterday, we were looking at, this is to determine the extreme low or high, depending on if you're bullish or bearish, of the week when it is formed. So if you're bullish for the week, you tend to form the lowest point on a Tuesday, 66% of the time. By Wednesday, this is by Monday, sorry. So by Tuesday midnight, meaning that by the end of Monday, we should have at least clarified more often than not the low or the high of the day if we're bullish or bearish. So if we can find out for the weekly bias, if we can get the weekly bias direction correct, then we can assume that by Wednesday, which is the end of Tuesday, by Tuesday London, we would have afforded or created 86% of the time, according to the sample size of 37 days or weeks, 37 weeks, right, from 2026 to 2025 EU, right? That's the November 2025 to July 2026. This is our sample size. By Thursday, we've achieved the lowest point, 95% in alignment with the weekly end. Now, we can then talk about what it means, but that's a different topic. I always want to be on the side of 50% and above. And the reason being is because when odds are in your favor, over time, you'll be paid. That's what casinos do. Now, here's the thing about this, though. You don't want too many 50-50%. Because when you start adding them together, it actually gets lower. So if you have a series of 80% chances, bam, 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 and you add them all up, it almost acts as 1% in a way. Because you are trying to find institutions. You're not trying to guess price. You're trying to find footprints of people that are better than you. And you're essentially copying them. That's the best way. One of the best ways to make money, in my opinion, is to follow the people that are already rich. Because why would you want to do something different? If you do something different, it means that you're going to be stepping into territory that is unmarked or there is not a blueprint of. It's like a recipe. I can bake a cake. The best way to bake a cake is to follow a recipe online. Why? Because it's already been done before. If I want to make a cake and I want to make it a new way, not to say you can't, but to say that it's more difficult, I think it's fair. So I would rather follow the footprints of the people that are already successful and place my capital on that within risk management. So, like I said, if we are bearish, the area of accumulation is from the open to manipulation, which is, let's assume we're bearish. This is the open right here. We had the distance of 10 pips up to London's high, which is the high of the day. Then we have the accumulation, which is the distance from the open to the high, mapped downwards. So 10 pips up is this manipulation. So accumulation is that plus 10 pips downwards, which is around about here. And that means that everything below here will be distribution. So we're coming in contact with the New York low. I want it to come up first before it goes down. If we can set it above this blue or this bullish candlesticks, 1, 2 here, which is actually an order block, we should be quite firm and sturdy and confident because it shouldn't go above there, because then we're going back against the direction of the day for the bias we have. Why are we biased towards the downside? Well, we were at the start of the week. How were we at the start of the week? Let me show you. Get rid of all drawings. You can see here that we have structure. I think I've said this before. I don't know. Okay, we'll just go over it again anyway. So you can see here we've consolidated. We're bullish, then we consolidated. A lot of the time that either means we consolidate, go continue, or consolidate, reverse. How do we know the difference? Well, patterns. Here we've taken out this strong swing low, and this strong swing low. So we've taken out these two areas within Monday, 22nd of June, which is almost a month ago. We kind of consolidated a bit here, right? But on the weekly time frame, if we kind of zoom in on the area of interest, you can see here we have a fair value gap, okay? And price tagged into that fair value gap whilst sweeping this. So with those two factors, we've now filled this fair value gap in, or we've tagged it in, taken liquidity from buy side. We're now going to look for liquidity sell side. That would be below today. We've taken out yesterday's already. So we have the liquidity of yesterday completely. We've taken out the high and the low of yesterday. So we have a low of fuel. Then we want to take out as well the low of the week before, and then this week. So weekly, the first weekly buys would actually be right here. So this is the low, which is low hanging fruit, right? And then, sorry, this would be reasonable hanging fruit, and then optimistic hanging fruit would be here. So those are our three targets, all areas of liquidity, all on a weekly time frame. So like I said, we're waiting for that pullback. Why are we waiting for the pullback? Because the entry model. We established this as satisfactory institutional fair value gap or manipulation involvement, and they push price downwards. We see fair value gaps. We pull back into such within the kill zone, and we are pushing back up again. Now, why are we pushing back up again? Because on a smaller time frame, we can see the same model being applied again. We took our swing lows. We had the displacement, right? We want to tag in to such displacement. So there is an opportunity to get in here, but there's also an opportunity to get in here. So the difference is that this is low hanging fruit, meaning that we can get in quicker. It's more likely that we get in. It's quicker, etc., etc. So I'll probably set my stop loss like 3.5, right? I don't expect it to come up above this order block right here. So this would be low hanging fruit. If I accept price to continue higher within this fair value gap, you actually have probably the highest I would want to enter is here. Let's remove or readjust this fair value gap. I mean Fibonacci retracement. So anything above this 0.5 is valid to get into, and anything within 7.9 and 6.2 is optimal. So ideally you want to get in here, which would line up with this order block right here. So this would be a good entry, but low hanging fruit would be here. Now there is opportunity as well. We shouldn't expect price to go above any bullish candlesticks while we're bearish. But because we're on the 3 minutes, you know, we want to be above this 0.5. We're very strict with our entry because I don't want to be too much in drawdown. I don't want too much space. It's very easy for price to go up. So I'm very patient. You'll notice it's come with experience, comes with time, and you have to kind of accept both ways that you may not get into the trade. It's a Friday as well. I'm not really pushing for the trade. I think the best time to trade is Tuesday, Wednesday. Tuesday, you would most of the time by Tuesday London session, it's in between 60% and 86%. You would have the time frame done. So for example, if we create another one, so let's say by Tuesday London session is what time? 7 to 10. So it would be 10 would be 3 p.m. So 1500. So 1500 is 3 p.m., which is the end of London session, right? So we now need to go through all of these. First, we'll just get Monday, Sundays all in. Okay, Tuesday, that fits. This doesn't fit. This doesn't fit. What? Count 30. Double check some. Perfect. So there's an 81% chance that by Tuesday 3 p.m., which is London session, we formed a low. a 8 in 10 chance. I mean, 2 of the times, like if you want to be certain, you can wait till like Thursday, but by that time, what's the point? So basically what you'll do is on a Thursday, you'll go through the markets and you'll look at the weekly time frame. We're bearish. This is a low. Price won't go lower than here 95% of the time. So if price won't go lower than, oopsie, let me get back. Let me use something else that's not linked to USD. All right, so this is a low. We're bullish because we have a bullish candle stick. So essentially we shouldn't go below here. From now, you have a very 95% of the time we shouldn't go below here. Doesn't mean it's going to go up. It just means the price will close above here. That's what it means. And so we can't use this information by itself to just start buying if we're bullish for the week. No, that's not how it works. Okay, so here's the thing. We have a series of bullish candlesticks here. Price display, so it's not a normal bullish series. It's actually partial order block. Price came up to it right here and is reactants from it. I don't expect, whilst we're bearish, for price to do that. But you can also have so it's unlikely we get tagged in because we're kind of looking for price to come above. Like, I'm very strict. If it's not in the premium, we don't enter. So it would have to, at the very minimum, tag the top of the order block for me to get involved. That's the very minimum. And so far we have not done that, so we can't get into that. That's hanging low hanging fruit, and the low hanging fruit target would be the first green line. This is some liquidity too, so this will actually be the lowest hanging fruit. But we could actually expect this to happen. If not this week, maybe next week, a continuation towards the downside, targeting and taking out the weekly low here. But I don't think here is that bad. If it doesn't reach, you might get to a 1 to 2 instead. We shall see. But that's my posture. I'm not analyzing every pair, sorry, because I'm just not. I'm focusing on the pairs I trade the most, and then I'm also studying. So studying is just going through the markets, back testing the different theories, and then taking it, taking it to where we want it to be. So I'm just going to load this up to ensure that we're ready. If the time comes. Also in 2 minutes we would have created a fair value gap. What about the hourly? A doji 2 hourly, 4 hourly. Okay. So 15 minutes, this will now become a fair value gap here. And then the next candlestick, we'll want price to come up. Okay, so I prefer writing it down on a piece of paper. That's the truth. But if it comes to, or when it comes to sharing the ideas and calculations, is better on my computer. I think let's do both. I don't want to do both, but I really like exponentially and prefer writing it down on a piece of paper. Okay, I need a pen now. Also, I can't be too long on stream because I do need to cook, so just keep that in mind. Right. We'll just play a quick chess game to alleviate some stress. How's the sound of this too? I just did my own strategy against them. Yikes. Uh-oh. I see what you're trying to do. Let's stop this. I think I just have to let that go. Oh wait, I can't even take with the queen. Just block like this. This is bad. Oh no. Wait, I need to find something. Let's go here. Okay. I cannot. I'm trapped. Okay, give me some play at least. So lucky. Yeah, that's coming. How do I need to take this out? I can't even go here because he can take it with the. I think we take it. Allow them to get my queen here. Like, what am I doing? Oh, now you want to alert me. What kind of stupidity is this? Okay, we got our entry at least. It's a bit more than I would have liked. Could be, yo, relax. There we go. Four, two, 6, 9. Great. So expecting a continuation, taking out this low, and then yeah, I want to know if it comes back up here, because we may have to come back out, and then I want to know if it comes. And please alert me before it happens. Goodness gracious. We'll take some partials over there. Our first overall TP is there. Excuse me. Just a minute, created this fair value up here. We tagged in on this candlestick. To be fair, probably have it over like well. It's the initial bullish candlestick. Potentially even have it like, it shouldn't come up to the midway point, which is this blue line right here. I don't think it should get to here. I think a sensible stop loss would be, just make it over here, 4344. It's a bit more than what I'd like, but it's better than losing the trade. Jeez. It says stop loss of 13775. Right. Sorry, that was terrible. Let's go here so we can get the queen involved. I don't think that's the best, but let's go here. Okay. It should still be fine. I don't see a way he wins right now. Okay. I want to trade, but I don't want to trade, so there's no need. He only has a queen, so there's no need to trade here. Let's go here. Hey, we can ask for a trade here. So it's basically you and Stevens. He doesn't want to. Bold. Let's go here. So it's now protected. Artificial is protected here, but it's actually doing something here. We have this. Okay. Oh, I just so much ideas. No. I've lost to stupidity twice. Alright, lock him. So you can keep it open just in case. Right, so we're gonna go back to the 4th of November. I'll show you guys how we do what we do. So we changed on settings, scales and lines, save chart left edge position when changing interval. So we click that. Take this to the weekly time frame. And now we look for the date that is relevant. So we like a red line. So get one vertical red line, Alt V. I click Alt V and you can create it. The 4th of November 2025. Wait, that's wrong now. It'll be the 2nd of November. So I'll buy a pack of 2 somehow. 30th of November, is that correct? And the 23rd, yes. I know where it is. 9th to 2nd. I did my maths wrong. So we take that red vertical line, we put it at the week. So we've already done this week, right? So let's get my note, I can open it anyway. 2nd of November, we've done it. So we can go to the week before, which is the 26th of October. Why 26th and not the 27th? Because that's a Monday. Markets open on a Sunday. And this is 25 still. So what I can then do is on my wait, that's not November, sorry. October. So then I'm going to do 26 minus 7 is 19. 19 minus 7 is 12. 5. And then that will carry on to new month. So I'm going to write down the dates for the next couple of days. Or weeks for the next couple of weeks. Dates for the next couple of weeks prior. Okay. And we go to the 5th of October, 4th or 6th here, and then find this. This will be the 28th of September. 25. Okay, and we do our maths. 21. Or 21st, sorry. 21st September. 5. 14th September. And then 7 before that. 7th. Okay, wait. So we have some interesting news. So it can, in theory, go up to here. This is why patience is good. Ugh, I hate the save left when you're live trading. So it is, to be fair that we come here. This is another fair value gap. That's why we widened our stop loss, because we expect that price can come up. We just ideally don't want it to, shouldn't run too high up into this. So I want it to start reversing from here, which is the body of this candlestick here. I ideally don't want it to get to there, but yeah, we are looking for price to take out this area here. So if price gets up to this level, let me know. Cool. And now we can go back to this. We were over here. Perfect. So we got to the 7th of September. I need 2 more so I can fill up this page. So we have the 24th of August. And therefore we have the 17th of August. So the goal is to get 1,000. We want 100 for each instrument we go into. So if we're going into EU, which we're currently on, we want 100 instances. If we're going to GU, we want 100 instances. NQ, we want 100 instances, etc., etc. So I can see how it varies from different instruments. If it's a consensus, and therefore it's something I can do or utilize no matter what instrument I'm looking at, then we can know obviously from the data we collect. So starting from the 26th of October 2025, should be where the red line actually is. We can now drag it to the left and then change it to hourly so we can find the low or high. Weekly, sorry. Actually, it's probably easier we do it this way. August 17th. We're going to label if it's bearish or bullish. So Monday 27th of October is bearish. Bearish. So we have bearish, bearish, bullish, bearish, bullish, bearish, bullish, bullish, bullish. So bear, bear, bull, bear. bull, bear, bull, 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 bear, bull. That's wrong though. I made a mistake somewhere. Oh, I see where I made a mistake. 21st, 24th. Bearish. Okay. That's done now. Now we can look for the low or the high. So this one, we have is bearish. Drag to the left. Go to the hourly. It actually helps having an indicator that helps. I don't know how it's saved. What was it again? Days, week. This will work. So bearish, we want to look for the high. Tuesday, 1 o'clock. Here we are bearish, so looking for the high, which seems to be Monday, 1 o'clock. In the morning, zoom out, drag to the Sunday. Here we're bullish, so we're looking for the low of the week, which happened here Tuesday, 3 o'clock in the morning. And then 5th of October 25. Looking for the high, which is Sunday, 10 o'clock. And then 28th of September. We are bullish, so we're actually looking for the low. Wait, actually. To be fair, we are bullish. Thursday, 11 o'clock. 21st September, bearish again. The high. It's made here. Monday, 9 o'clock. In the afternoon, or evening rather. Bullish low is created Monday, 2 o'clock. I'm gonna check what that is. Okay, that's good for us. Okay, now it looks like we're gonna take this low out here. And the price can start moving in our favor. Do need the price to take out this low so we can get confirmation of continuation. It's not the only way that we get the confirmation of continuation, but it's a strong suggestion. If you take out the previous low, you're likely to create a lower low and continue the downwardness, which lines up with what we're looking for. Our first area, I don't know why it's here. I thought it was here. Let me double check what that first gray line means. Well, one flat. I think that's better. You see the rejections here, the bodies respected here, wicks here, wicks here. Might be taken to this 4-1 level here. I think that's realistic. Now I would need, technically we traded below, but I want something a little bit cleaner. Let me know if it shouldn't come above this candle now. It cannot go above this candle, so we can actually reduce our stop loss. And then spread, to be fair, takes it basically the same area, but it should not go above this candlestick no matter what, and it shouldn't even go above this body right here. Let me know if it approaches it. I can focus what I'm doing. Perfect, let's let that be. What is this? Oh, it's the signal, indicator. Oh, this is disgusting. Okay, so we are on 7th of September, which is bullish, which is correct. In it. Ooh. The low is actually on a Thursday. Yeah, Thursday, 8 a.m. Bullish. Wednesday, 3 a.m. And then last one's bearish as well. Oh, not as well, but bearish. Sunday 5, I guess. That open. Okie dokie. Surely it can gather the gist now. Alright. Puritan Clara. Doesn't really matter too much. Bearish. Bearish. Bullish. Bearish. Bullish. Bearish. Bullish. Bullish. Something's wrong. Ugh. Bullish. 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 I missed one. We can do on this sheet we can't. Tuesday. Oh, I got a better idea. To separate the times. What's it called when you join two cells together? Merge. Tuesday, Sunday, Thursday, Monday, Monday, Thursday, Wednesday, Sunday. 2200, 1100, 1200, 100, 500, 400, 1200, 1700, 1700, 100, 1200, 1900, 1900, 1800, 900, 1100, 400, 300, 300, 1300, oh, see, 2200, 1000, 1700, 1700, 2100, 0800, 1700, 0800, 0200, 0400, 1800, 1000, 1000, 2200, 1900, 1800, 1200, 1900, 1300, 100, 300, 2200, 1100, 2100, 0200, 0800, 0300, 1700. mess it up. I think it's the quickest way. Maybe I should have done it as like a whole number instead of a time number. Because then I can make a condition where it's like, if Monday or Tuesday and before or less than 1500, then yes, or like plus. It's probably easier to code than it is to. I don't know how to code an Excel like that. I would convert to drop downs, but I don't want it to keep the ones that have times in it as options. Might as well make this 1400. Oh, you can. Nice. Okay, are we taking out the low yet? Why are you creating liquidity for? So yep, like I said, this shouldn't price could go above this. It's wicked onto it twice. See what it does this time around. Okay. So we've got a sample size of 47 now. I will update the numbers later. Can I have do 50 more? Or I think we can move on. In the bearish market environment, 70% of the high of the week formed by Tuesday London session. So he has the percentage is lower than my initial sample size. Is that 81% of the low or high is formed by Tuesday London session. I don't know if he means buy as in buy like before or buy by after, because it could also be interpreted as 7 a.m. Wait, no. This is wrong. That should be by 1000. No. 500. I went the wrong way. Okay. Let's remove this. To be fair, it is in its kind of own way doing this. But like I said, it cannot go above this. We'll have to keep room for it to come up here and come back down again. Let me see how much spread I can do. I want to have a tight stop loss here, so I can just leave it out alone, like not look at it. So spread's about 1 pip. We can just say 2. So whatever it is plus 2. 6.8, we'll just change it to 4337. And then zoom in. We have come up into the highest area. It shouldn't, in fact, we can even say it 2 above here, which would be 6.1. Which is 433 flat. So we can reduce the risk. And that way we can kind of leave it without going back to it. So intermediate time high shouldn't go above it, but we'll see. If it goes above, we're not interested. It should take out this low. It's just created equal lows right now. Let's look at GU as well. Okay, let's get rid of this disgusting. I'm contemplating continuing because I do want to cook. What's the time? 2:30. I wanted to cook by 3. 30 minutes of a video. Is that worth it? Okay, we have been streaming for an hour, to be fair.
You want to save as picture.
I don't think I took notes in the last 40 minutes of this session, so we can go through that real quick.
The little kid in the swimming pool. It's going to be the elephant. When that elephant gets in that pool, boom, the kid is taken completely out and the water is displaced. So what do we see? Displacement. Okay. Price is now taken, driven lower. Okay. Those that would have been
Not
trading
good.
what would be whatever their idea of this is a climax reversal or something along the lines that would support a buying indication in here. And again, we're not arguing or making any case for that, but we're just going to assume for a moment that somebody out there in the retail world assumed that that level was probably a good area to buy. So if they bought here, where would their stop loss be? Right below that. Okay, so price is driven where? To where the liquidity is going to be, here. Okay, so here we have price trade down and trade right back up to what? This level. Now it becomes another selling opportunity. Who's going to sell? Some more of the smart money. So they're going to put some more of their orders in, and then boom, it rides lower. Okay, this short-term swing low here, because we're not drawing levels on it, okay, you can look at a lower 5-minute chart and see even greater dynamic support resistance levels, but I'm using a 15-minute chart simply because you'll learn later on that your trade setup's really going to form on this time frame. But we're going to keep it uniform and keep the continuity going, and we're going to use this low here, price trades up to there, and once we blow through it, we trade through it again, okay, but we come right back up to this old swing low here. So I could have another level, but to keep it clean on the chart, I'm just going to keep it, just like you have here. Don't expect, perfection in terms of your support resistance levels. Sometimes they'll knock your socks off and be so specifically, right to the minute on the pip. But we're only talking about here 14 pips in terms of variance. So again, that's less than half of what a normal stop loss is. Again, for those who don't know, I usually trade around with a 30 pip stop loss. And again, we'll understand later on why I use that later on. Again, not now. So we move into a new week. Okay, price rallies up, and this little pause here and turn down happens where? Look over here. See that? Okay, so price trades down. Okay, find some short-term support, which we're not going to look at because it's going to be on the 5-minute chart. You can do that on your own. Rallies through, okay, and does what? Blows out a swing high. Why? Because maybe at this point, some guys have figured out this is a down move, okay? So they're going to be doing what? They're going to be selling. Yeah, those guys sometimes in the street, okay, get it right. But do you think the elephant really wants them
this is probably gonna hit stop loss. It's unfortunate, but it is what it is. I swear, if it goes down from here, I'll be so livid. All that work. Just go in again really quickly. Something like has to be less than the amount I originally lost. So yes, right there.
I'm in the pool with them? No. Okay, so what's going to happen? Well, they're going to be short. Okay, and they're going to use this old high as a level to do what? Protect their position, right? Even if they're selling down here, or maybe they saw this low here and they want to be a seller right there. Great. What are they going to use as their stop loss? It could be this high here or this one. So let's take a look at what happens. Here's your old high. And we're going to use that level, and we're going to just go above it a few pips, not much. Here you go. When price trades right there, the nature of the spread does its work right there. What order would be resting here? Again, assuming that the retail traders are short. There's going to be a buy stop right here, a buy stop. So when that price trades up and boop, stabs into that level here, what's going to happen to that buy stop? It becomes a market order to do what? Buy. Who's going to sell it to them? Smart money. And then when you see price rally up like that, bang, what do? They drive it down to their level, okay? And now this is where they liquidate all their short positions back here. Now they could have liquidated some in here, okay, and that's what caused the pause in here, because now they're buying back some of their net short position that they've assumed between the 130.60 and 150 level up here in this block of price action. But as price trades down to this level here, okay, they're essentially now no longer heavily net short. They may have some shorts still on, but essentially they have been unloading every time price dropped lower, okay? Because they're larger institutional traders, they have to be exiting during the move, but certainly driving price down to a specific price point, as we noted on the higher time frame. Now, when price gets to these levels here, we could look for patterns to trade, because again, this would be a higher level support level, okay? And you can see price does indeed rally up, okay? And for those that had been using these points here, okay, and trade on a daily time frame, because there are 9 to 5 desk jockeys and they can't be intraday traders, so use daily bars to put their stop loss orders, okay? Those guys are crushed as well and left feeling bewildered and like the game is rigged. And you just learned that in fact, it is rigged.
Okay, I'm too hungry. I'm gonna end stream here. Close all my trades. Okay, I'm not gonna be in the markets right now. It's Friday. Ugh, not looking good. The setups. So I might do some more of this on stream over the weekend. We might stream it. Who knows? But we will do this. Hopefully, I have 100 by Monday, and I would have taken notes on this video. But after losing that trade, I am not happy. So I'm gonna go back to studying even deeper and further. and we'll continue later on. But appreciate everybody for tuning in. It's been your boy CJ and I'll catch you guys next week Monday. Peace.